What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the Nasdaq, the QQQs, and the futures. Break down what the charts are telling us, what you should be watching for tomorrow, and why I believe the market's going to likely pull back a little bit more before we do get a bit of a bounce. Before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each valued at up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends tomorrow, so make sure you check it out before they run out. With that out of the way, let's get on with the video. So SPY was up 0.34% for the day. We actually got a nice gap up in the very beginning. I did mention to you guys that we'd likely see the market bounce, and that is what ended up happening. But then we did end up actually downtrending, and we've been respecting the previous resistance, which is now becoming support. And so far, the market has held up okay. However, if you consider the fact that we are on this downtrend, the market has been downtrending quite a bit, and we actually failed to actually break above the very important 401.5 level, maybe like 401-ish zone. Because we failed that, we are still showing some signs of weakness. Now, one of the questions many people may have is, are we about to bounce around here? And I do think the market could come down, but if we bounce very soon around this 396, maybe 395 level, we could come a little bit lower to this 395 level before bouncing. This could be resembling a possible inverse head and shoulders. It's very possible that this could be forming, and we might see the market try to get a breakout to fill this gap to the upside. Now, the reason why I'm still talking about that being a possibility is because of the fact that we do have a bullish divergence still forming with the overall market. We had this bullish divergence right here that developed, and overall the market started uptrending as we did see a bit of a downtrend. So we're getting a lot of signals telling us that, look, the market is still in a position where we could see a bullish continuation. Now, the real question is, could we break this level? I don't know for sure, but what I would basically predict is we have to watch the levels. If SPY breaks below the current level, 395, 393, and then 390 are the main support zones. If we break to the upside, resistance is going to be around this 400 area. Then followed by that, there's going to be 401, the zone around 401. Then after that, if we could break 401, there's also some resistance around 402. It's a whole zone. If we break above 401 to 402, you have to watch 404. If we break 404, there's a potential for the gap fill around 406. Now, I'm not counting on that. I'm not promising it as of right now. We have to see how this develops first. So far, we actually held the previous resistance trend line. It's now becoming support. This is telling me that the market could pull back a little bit more to finish filling the gap, come all the way down to maybe like the 396 zone, a little lower than 396, maybe even touch 395. That's also very possible before we do get a potential bounce. If the market bounces, it's likely going to be forming this inverse head and shoulders, and we could actually see this thing push all the way back to this 400 level, maybe even higher than that. Now, my prediction, once again, is a bit of a pullback and maybe a bounce tomorrow. I'm going to show you exactly why. On the triple Q, something very similar is going on. Triple Q is actually on a bit of a downtrend. It hasn't come close to filling its gap. It might either ride this trend line, or it might almost fill the gap tomorrow, come down to like the very low 290s, which is not that far away. It might come down a little bit, then get a bit of a bounce tomorrow. And then if it does bounce, I'm going to be watching this gap all the way up to about 300, all the way up to like the really low 300s. I think we could come back up to 300 because of Tesla. Tesla might be the thing that causes it, or at least helps it, because Tesla is building a lot of momentum, and there's lots of bullish price action, in my opinion, for Tesla that's developing. Tesla has Investor Day in a couple of days. I believe Tesla's going to pull back a little bit, come back to maybe like the 205 zone, trade a little sideways, and then start pushing more and more, and eventually break 209 tomorrow. And it's eventually going to fly all the way up to 215 to 216, potentially 221, which is where the daily 200 moving average happens to be. So I could see Tesla continue to break out, but that's going to depend on Investor Day. I think as we approach Investor Day, we're likely going to continue. NEO, in my opinion, might also break out. That's because NEO has earnings on Wednesday, so be ready for that. AMC also has earnings on, I think, tomorrow. That's going to be very interesting to watch. For AMC, we got a nice break to the upside. What I'm going to do is take the weekly chart like this, and let me actually close out the moving averages. It's making the chart kind of confusing. We have a major resistance line, which AMC is getting closer to. That's going to take AMC to about 11 if we could actually break to the upside. Now, that could be the top of this rally if it does continue to go up like that. It could even break higher because it does have a very high cost to borrow, but there are quite a bit of shares available to borrow. So it's not necessarily getting like hammered, but I want everyone to just be very, very cautious. I think AMC tomorrow, she's going to break $8 and fly and try to get close to 9. I don't know if she's going to break 9. It really just depends. And then it also depends on earnings, what Adam Aaron, the CEO, ends up announcing. But right now, it looks more bullish. It's going to likely continue to push up past 8 for quite a while before it reacts after earnings. Don't turn into a mega bull. Don't turn into a mega bear. Just watch the chart and see what it says. But historically, after earnings, we do tend to see AMC slow down. Please be ready. Even if we do push up and we break like 8 and 9 and 10, watch the resistance line right here. We have major resistance around the 11s. All right. So once again, be very patient, be very cautious, and just remember, for the medium term, I'm still bearish for the stock market. For the short term, I'm still kind of mixed, a little bit more bullish. That's because of what we're seeing right now. I think the S&P 500 and the QQQ could push up a bit. Maybe they come down and then bounce because I'm seeing this gap slowly getting filled on the VIX, and I think the VIX is going to get dragged down all the way down to the low 20s, all the way maybe to like 19 or so. I think the VIX is going to get smacked down a little bit more. And I think that this is going to be correlated with the market pushing up. The market pushing up could actually cause that. Then I think the VIX will basically find its bottom and then bounce, thus leading the market to actually start to downtrend. So for the short term, the VIX is telling me the market's likely going to hold up, maybe try to bounce. For the medium term, I think the market's going to see lots of pain. And that's what the VIX is basically suggesting on the bigger time frames. The dollar is actually telling us the same story. If you look at the dollar, it has been breaking out, but it actually downtrended a bit today as the market pushed up. I think that the dollar is very close to a key support around that 104. It might bounce off there and continue pushing up, but until then, it's basically stuck in this area. So if it does continue to come down, this could be bullish for the stock market, but overall, when you zoom out, the trend is still bullish. I don't count on the dollar necessarily tanking from here. I think the dollar is going to pull back a little more, then get a nice bounce and continue the rip to the upside, thus being bearish for the stock market. For Amazon, I'm looking for this thing to try to bounce and try to fill the gap around that 95 area. If it does end up doing that very soon, that could be bullish for the markets. But it might come down to 92 first and form a double bottom before doing so. So watch these levels very carefully. Additionally, we have Apple. Apple is going to likely come down as well to finish filling its gap down here. It's going to likely come all the way down. Wait, where's the gap? Hold on. It's going to come down a little bit more. Here's where the gap is, to this 146 area. I think Apple's going to fill this gap way down here, then get a nice bounce and continue pushing to the upside. And what's it going to do when it pushes to the upside? Fill the gap and get closer to 150. If it breaks 150, then it could fill the gap around 152, but I'm not necessarily banking on that. I'm not going to like play it. I just wanted to put that out there. Other than that, I went over mostly everything that's very significant for the market. The last thing would be the 10-year treasury yield. In my opinion, this thing might come down to fill the gap to the 38 level, the high 38s. This is actually bullish for the stock market if it does end up coming down a little more. And then it might find a bottom around the 38s, get a really nice bounce, and then start filling the other gaps in the 40s. And if that happens, right, that's going to be bearish for the stock market for the medium term. So for the short term, I'm seeing the VIX maybe coming down, the dollar breaking down a little more. I don't know about the dollar if it's going to break down that much. And then the 10-year treasury yield maybe breaking down a little bit more. This tells me for the short term, the stock market, we're talking about like the S&P 500, the QQQs, the Microsofts, right? They're likely going to be bullish. They're going to hold up, bounce, and turn bullish. They might come down a little first and then bounce and then turn bullish for the short term. But for the medium term, I'm seeing the dollar continuing to break out. I'm seeing the VIX continuing to break out, and I'm seeing the 10-year Treasury yield on a nice uptrend that has not necessarily died. That tells me that for the medium term, I'm still bearish for the stock market. Going into March and April, I see more downside for the stocks. I'm seeing downside for almost everything that's like positively correlated with the S&P 500. Almost everything, not everything, but you guys understand my point. The large majority of stocks out there. And I just want everyone to be very cautious during these times. All right. So with that said, for tomorrow, I'm seeing the market maybe pulling back a little more and potentially bouncing. And I do believe despite the bounce and despite the potential push up that could come over the next few days, there's likely going to be more downside to come later. All right. So thank you all for listening. Have a great rest of the day, and I'll most definitely see you guys in the next one. The market to the moon because the long term future is still incredibly bright, and peace out.